रिस्क है तो इश्क है.
Risk hai to ishq hai. Welcome to part 2 of the cryptocurrency scenario in India series. If you have had a chance to watch the part 1, great. If you haven't, it's linked in the description and also possibly here somewhere if YouTube allowed me to do that. So what will we cover in part 2? Very simple. I will have a card here so you can look at it, but it's crypto, how it all started in India, what it is today, so how it all started, where we are today, what does the ecosystem look like in India, how many players do we have, like the cryptocurrency exchanges, what are the recent developments, what have been happening in the news from the government, from the industry, what's happening in, again, very specific to India, what is the future looking like based on the news, based on the updates that we have from the industry, and what is my personal opinion on whether you should be trading and investing in crypto or not. So let's get started. For anyone who's been following the crypto industry, you would know that it all started with Bitcoin, like the very first crypto coin was Bitcoin, and it started somewhere in 2008. 2010 it was the first time that it was used as a currency, and somebody paid 10,000 bitcoins for 2 pizzas. That would be weird today, but that's how it started. So that attached a cash value to the cryptocurrency for the first time, and then 2011 other cryptocurrencies started to emerge, like Litecoin, Namecoin, Swiftcoin, and today there are up to 8,000 different coins that you can all find on CoinMarketCap, and that I've mentioned in the previous video. Then 2011 Bitcoin becomes embroiled in a controversy over claims that it is being used on dark web to pay for guns and drugs and among a lot of other things, and it creates quite a stir. 2012 to 17 cryptocurrencies gain traction. The price of Bitcoin shoots from $5 to $1,000 at the end of 2017, and that's when you have a lot of action happening in India. So then 2017, that period is when all these cryptocurrency exchanges started to mushroom in India. It was ZepPay, CoinSecure, Unocoin, CoinX, PocketBits, a lot of them, right? Then when this development started happening, RBI sprung into action. They released 2 press releases. The first one was in 2013, which said that virtual currencies are not backed by a central bank, and the second point, it stated that their value isn't underpinned by an asset and thus a matter of speculation, which we all know. When it comes to Bitcoin and crypto, it's speculative currency. The second press release that came from RBI in February 2017 repeated the same concerns that were stated in 2013, that it is safe to assume that crypto boom that followed 2016 demonetization was an unintended consequence of that particular experiment, and the emphasis on digital payments led to a search for alternatives to traditional online banking and drove tech-savvy customers to cryptocurrency exchanges. So in October-November 2017, a PIL was filed in the Supreme Court asking to ban buying and selling cryptocurrencies in India, and the other PIL was about asking for them to be regulated, right? So 2 PILs were filed in Supreme Court in October and November 2017, and in November the government formed a committee to study the issues around virtual currencies and propose actions. So in December, the RBI and the Ministry of Finance issued statements on cryptocurrencies. The ministry compared them to Ponzi schemes. Now, people who don't know Ponzi schemes, is like, if you've seen Akshay Kumar movies where there's a scheme where you put money and it gets double. So those kind of schemes which are not at all legitimate, right? Ponzi schemes. And the issue, about that status quo, like So today as well, the last statement that RBI made and Ministry of Finance made in December 2017, they are stuck to that Bitcoin and they're all Ponzi schemes. So in April 2018, suddenly everything changes. The RBI issues a new circular preventing commercial and cooperative banks, payment banks, small finance banks, NBFCs, non-banking financial corporations, and payment system providers from dealing in virtual currencies and providing services to all entities which deal with them. So if banks or any banking, whether it's cooperative banks, payment banks, small, any kind of banking industry doesn't work with any entity which deals with them, which is the exchanges, how would you buy cryptocurrencies, right? So it is an indirect way of crippling the industry, the cryptocurrency and crypto exchanges. So 2018 was a very tough time for all the crypto exchanges, but so ideally the crypto exchanges were cut off from the banking services. Their business crippled overnight. 2018, the volumes fell by 99%, and by August 2018, 95% of the crypto industry was gone from India. Now in May 15, several exchanges filed a cross petition to this Supreme Court. July 2019, the committee submits a report recommending a ban on private cryptocurrencies in India. In March 4, 2020, so March 4th, 2020, that was a big day for all the crypto enthusiasts and cryptocurrency industry in India, because the Supreme Court strikes down the RBI banking ban on crypto, terming the April 6 circular unconstitutional. And one of the reasons for overturning the ban is that cryptocurrencies are unregulated but not illegal in India. So that's the big difference, right? They are unregulated, and they are unregulated in most of the countries around the world, but they're not illegal. So the crypto market, which was almost dying, on the verge of dying, it came back to life. That was in March 2020, which is again the time when we got into lockdown. The whole world was affected by COVID-19, and that is all connected how the crypto boom started in India and around the world. So now that the world was locked down, everyone was indoors, they didn't have much to do, and people started investing online. So whether it's share market apps, whether it's mutual funds, any kind of investment apps, including crypto apps, they suddenly had a surge in downloads, and people started online investing and online, so everything went online, of course, and people sitting at home had to find some way to earn money, so they started investing online, they started purchasing cryptocurrency, and suddenly, so one of the positive impacts of COVID was a big online boom in investments and cryptos, and so every industry, whether it's in investment in share market or investment in anything related to investment and trading, got a huge boom, and crypto was one of them. Crypto got a huge benefit out of that. So this was March 2020, and again we saw a lot of new crypto exchanges coming up, and somehow the ones that were surviving, which were established before March 2020, suddenly saw a huge traffic, huge boom in their revenue, their trading. The last number that we got, again it's online published, so I won't quote the sources, but daily on an average India is doing $2 billion worth of dollars in crypto trading, and that is a huge number. 2 billion every day. Okay, so this has been the history, how it all started, where we are today. But the ecosystem, if we talk about the ecosystem, there are at least 15 to 20 different cryptocurrency exchanges based in India, found by Indian. The biggest ones that I know and they have been in news is WazirX and CoinDCX. Of course, there are other ones like ZepPay and Paxful and Unocoin and Goitas, and so you can go and find them online. You'd find a lot of different names. So the biggest ones, WazirX and CoinDCX, because WazirX is acquired by Binance, which is one of the biggest cryptocurrency exchanges worldwide. Binance operates in several countries in the world, and it is WazirX is part of Binance now. So again, that is a big name in the crypto industry. And CoinDCX, again, because they got, I think the last news I read about them is they got like 100 million investment, like startups get VC funding, so they got a round of funding, so it was 100 million something. So Coin-D6 is huge again. So this is like the ecosystem looks like in India, around 15 to 20 different exchanges which are based in India, operated by India. But let's get back to this, this point in a bit. So the next thing that we want to cover is what are the recent developments. The government of India has not been very supportive of crypto. They still think, oh, it's used for illegal activities. It is not something that people should be allowed to trade. And they, the first news came sometime back that the government of India will ban crypto. So no one would be allowed to hold it. Anyone who has it has to sell it off and liquidate their crypto, and the government will completely ban it. So you will not be able to buy or sell or crypto. Like government has banned Chinese apps, right? So you cannot do anything about them. So that's the first news we heard. Then there was a new news that said, oh no, the government will not ban it, because it would be an idiotic move, to be honest. So the government will not ban it, but they will try and regulate it. So they will come up with some new regulations and they'll try and regulate it, or they'll take some, the actual word was they'll take some broader approach with it. So they took back their words that they're going to ban it, but they we'll look at the industry, or we'll look at something, we'll come up with something. So that was the next news. And so if you ask me, I am all in for regulations. There would be a wonderful ecosystem with regulations coming in, and it will be beneficial for all the players, whether it's the exchanges, whether it's the investors and traders and crypto enthusiasts. Everyone would benefit, and I'll tell you how. But let's look at another news that the RBI and the government and the finance ministry came up with is that we will come up with our own CBDC. Now this is another acronym that I did not cover in the last video. So CBDC is central bank digital currency, CBDC. So China has already done it. They have their CBDC. A lot of countries around the world are considering CBDCs, central bank digital currencies. What that does is, it is still crypto. It is an online currency, not crypto, but it's regulated by the central bank of the country. So in this case, if the government comes up with CBDC in India, it would be rupee, and so it's like digital rupee, and it would be governed by RBI. So that's great. That's something that they said. The last update was that we'll come up with our own CBDC. What is the future for crypto in India? Number one, there is a lot of confusion. The government is not very clear about what they're supposed to be doing. So everyone who's invested in crypto is unsure and is not very clear as to what the future entails for them. Right now, it is not illegal to hold crypto or deal with crypto. It is still not banned. It's not illegal. But if the government wants, it can actually cut off the banking part. It can make it a new rule that the banks will not be allowed to help crypto exchanges. So you might not be able to invest. Right now you can buy with your debit card or bank account, IMPS, whatever. Crypto, you will not be able to, just like it did earlier on. So that is one possibility. They might say, okay, we will regulate crypto, whether crypto transactions would be taxed at 18% GST, and that's what should be an ideal situation. But nobody knows. As of now, there is a lot of ambiguity. There is complete lack of clarity as to what the government of India wants to do with the crypto industry. So what is the future like? It's anybody's guess. What is my personal opinion on trading and investing in crypto? Now, you may call me a pessimist, but hear me out. We started this video with an introduction of a part from Scam 1992. We live in India. This country is a country of scams, right? The amount of scams we've had, whether it's Nirav Modi, whether it's Malia, and there are a lot of banks involved in it, right? So every bank you could possibly imagine, from SBI to PNB and these are all government banks or private banks, they are all involved in some kind of scams. So people have lost money when it was in a bank which is regulated by RBI. You have a regulatory body, Reserve Bank of India, RBI. You have regulatory bodies for investors, which is SEBI, Securities and Exchange Board of India, right? So even when you have regulatory bodies for banks, for investors, there are still scams. Here in crypto, for crypto exchanges, whether it's WazirX, whether it's CoinDCX, there is no regulatory body. So tomorrow if WazirX, just imagine they just say, oh, we were hacked and all our crypto is gone, so your crypto is also gone and we cannot pay you anything. Or they just close shop and they go away. Who would you go to? You have no one. You have no legal recourse. And again, I mean, yes, you could possibly sue them in High Court, Supreme Court. We know how the government and the law of this country functions. You might be dead before that case gets resolved, right? So today, if you're investing in crypto through any exchange, no matter how big it is acquired by Binance, whatever it is backed by, funding from some VCs, biggest VCs of the world or whatever, you are at your own risk because it is all about trust. If you trust those companies, go ahead and invest it. And there is a difference between investment and trading. So if you want to invest, it would be a long term, and that is what I would say, is the way to go with Bitcoin, at least, because it has grown steadily. And if you would have invested 3 years ago, 2017 to 2020, you would have been a millionaire. Again, from December 2020, when one Bitcoin was $20,000 to today, it is $63,000 at the time of recording this video. Crazy money, crazy growth. So yes, you could invest and stay in the industry and being invested for a long time, or you could trade. And trading is normally like you hold something for a short term. So you buy crypto and you sell crypto. So you trade, right? I would say trading is still less risky because you are holding crypto for a short term and you're looking for short term gains. Or you bought Ethereum for $2,000 and you sold it for $2,500. You make $500 profit and you are out. And then you started buying another Litecoin or Dogecoin or I don't know, any other cryptocurrency, and your whole purpose is to trade. So you're buying and selling. Again, yes, your money is with these companies, and as I said, it's all about trusting these companies because there's no regulatory body. If tomorrow anything goes wrong, you have no recourse. You cannot go to any regulatory body to get your money back. So it's all about how much you trust these companies. So that is what my personal opinion is. It is not an investment advice. It is not a financial advice that I am doing here on the video. I mean, it is your money. It is your choice what you want to do with it. But today we are in an unregulatory business, unregulated industry. And when there are no regulations, there are no rules, there is no protection for the investors, for the traders, so there is no protection for you guys. If you want to take a risk hai to ishq hai. If you want to take a risk, go ahead and do it. It's your money, nobody can stop it. But be prepared that you might lose all your money that you've been investing. And as I said, some people might call me all pessimistic, but that's my personal viewpoint. So if you want to invest, I would still say there is a huge ecosystem in all the other countries around the world, and Indians are everywhere. You have people living in Australia, UK, US, Canada. Indians live everywhere, and I work with the UK based cryptocurrency, and I was doing my competitor analysis, and UK has like 140 cryptocurrency exchanges. So it's a huge market, and there's a lot of development, and they are getting regulated. FCA, the Financial Conduct Authority, which is the regulatory body, has already asked all of them to file for license, and it would be issued June if it is not delayed again. So June this year, you will have regulated UK cryptocurrency exchanges. But I was just doing a competitor analysis, and I found that out of just 5, not even 140, out of just 5 which we chose as competitors, one of the cryptocurrency exchange had 25% traffic from India. So Indians are already doing crypto investments or crypto trading with a UK based company or a US based, or a, you know, and it is very possible because you might have friends or family or relatives staying there, and you can get their help and trade. Also, there might be a lot of companies which have you know, possibility, which offer services in India. They are not from India, like this one's CoinDCX or Xerex or Zapay, whatever, but they might have services operated, you know, services being offered in India. So it could be one of those things, but I'm sure the company that I was looking at, it does not have any services being offered directly in India, so people are investing in there. So yes, if you're really hell-bent, if you think that you are losing out you know, time and a great opportunity by not investing in crypto, go ahead. I mean, you have so many other methods. It is just how good you can look at, you know. But my personal opinion, I would not invest it. I mean, I don't trust Indian companies. I don't trust, I mean, it's too big a risk for me. And the only thing I would do is possibly maybe just trade, not invest for long term. If I really want to invest, it could be some other company in some other part of the world, maybe US based company, maybe, you know, UK based company, but not an Indian company, unless we have rules and regulations and there's some kind of protection for the investors, for the traders. So I hope this video was helpful. Again, we are reaching almost 20 minutes, but thank you for, if you've made it through to the end, thank you for staying through the end, and I hope that this information of whatever I've covered in the video is helpful, and I will look forward to seeing a lot of you in my next video. So stay tuned, and thank you very much.